Hey everyone, welcome back to My Favorite CPA. My name is CPA Dan Hodges, and today I wanted to talk about something that I thought might have mass appeal. Let's say you're a W-2 filer. Man, the W-2 and W-4 withholding certificate situation has definitely changed in recent years. It's almost annoying. The IRS, within the past couple years, they did significantly change Form W-4, and the reason they did is to take into account people that have various situations ranging from multiple jobs to a job and a self-employment gig. If you've read the W-4 form, it's good and bad. A lot of people are more confused than ever. So let's just kick things off here and talk about what is a W-2 form. I know that might sound a little basic, but this is a statement that's given to you annually by your employer. It basically totals up your paychecks and your pay stubs for the entire year. It should show things like your gross pay, your total of withholdings, be it pre-tax withholdings, post-tax withholdings, or tax withholdings themselves. And as far as tax withholdings, what we're talking about here is things like Social Security tax, Medicare tax. Those two together are often referred to as FICA. Then we have federal withholding, state withholding, and local withholding. That's the basics. If you're in some far east or west states, you can have some other things too. So your W-2 will issue totals for all those categories for the year. It also has things like your name and address and your Social Security number. Oftentimes nowadays, the Social Security number is obfuscated with like XXX or star star star, maybe showing the last 4 digits of your social. As you're looking over your W-2, make sure that things like your name and your social appear to be correct. If they're not, if there appears to be an error, talk to your employer or your HR because you want that to be reported to IRS correctly. Otherwise, you don't get credit for this stuff. Social Security also, in their publications and on their website, they will talk about the number of cases where employees did not get Social Security credit because the earnings were reported in the wrong name or the wrong social for a year or a couple years or a length of time. And so they do encourage you to check your Social Security records periodically from time to time and compare it to your W-2 earnings. Now, one of the most practical ways to address your tax situation, and one thing that definitely catches people by surprise, is when they've had taxes withheld all year long on their W-2 wages, they go to file their return, and they end up owing money. Often this is a situation where it's a married couple, 2 income sources. Sometimes it's a married couple with each of them have a couple W-2s or a couple two, 3 few W-2s. Understand the way the withholding tax tables work is really this simple. What the tax tables would do is multiply by 52 your gross pay for that week. So if you had a part-time job with a small pay, let's say $100, the withholding tax tables would multiply that $100 by 52, and it would make the assumption that your income for the year would be $5,200. If you have multiple part-time W-2s, you can end up in a situation where you owe because you have one W-2 with $5,200, one W-2 with $10,000, one W-2 with $20,000. Some of the bigger ones might have an appropriate tax withholding level, but the one that has the low pay is thinking that is your entire income for the year, and as a result is thinking you would be low tax, and therefore it's withholding instead of at a normal rate for you, it's withholding at a much lower rate, maybe nothing. So what's a practical way to double check this during the year? Just eyeball it. Get out your tax return from last year, look at your total income and compare it to your total tax. I'm talking the federal form now. So if you look at your total tax and you divide it into your total income, you might be able to derive an average tax rate percentage. Let's say that On last year's tax filing, when you take the amount of tax the government kept to your income, that ratio works out to be 10%. Now, as you're looking at your pay stub during the year, if your federal withholding is lower than 10%, that would be a sign that you're going to have a problem. And likewise, if you were to look at your total tax and compare it to your income, and if it were 20%, if you're looking at your pay stub during the year and look at your federal withholding compared to your earnings for that period, if it's like 10% or zero, again, you're not paying enough tax in. It could lead you downriver to some problems. So I just mentioned all that to say that you are really the person in control of how much taxes are withheld, both by submitting your W-4 and eyeballing how much is withheld and then comparing it to your tax filing and deriving a normal percentage that you probably should be paying in. I'm not saying it's going to be perfect, but it's going to get you a lot closer than those people that have absolutely nothing paid in on multiple W-2s, and then at tax time they're crying the blues. Now, by sharp contrast, if you're having something crazy like 30-40% withheld, and you know historically that the IRS is only keeping like 10%, obviously you would have a huge refund at tax time. Now, back to the global issue here and going away from W-4 withholding certificates and W-2s and pay stubs, let's talk about ways that you can increase your refund. Educate yourself, get knowledgeable about things on your tax return like tax credits. Credits are an entirely different thing than deductions. When we're talking about tax credits, it is dollar for dollar treated like money that you paid into the government. So let's talk about things like, for example, the earned income credit. This is heavily tied to things like having a family, specifically having children and younger children. There are large tax credits that are available for you as a taxpayer, so make sure you're taking advantage of those. Then there are things like education credits, which would be the American Opportunity Credit and the Lifetime Learning Credit. So if somebody in the family is in school, whether it's a dependent or mom or dad, make sure you're taking advantage of and looking at those tax credits. And if you're not sure, hire a tax professional. It can pay huge dividends to study that stuff out. Next, let's talk about things like deductions. Deductions are things to look at when you are working on your tax filing or to be aware of in preparation during the year for tax time. Most people cannot itemize their tax deductions anymore due to the significant increases in the standard deduction afforded to us by the Tax Acts of 2017, commonly known as the Trump tax deductions that are soon expiring. So as a result, people that have a heavy mortgage interest or heavy real estate taxes, they pay all that and there's no additional tax benefit because you get a huge standard deduction. Every American does. There are things though you can take advantage of, like for example, student loan interest deduction. It's capped out at $2,500, but every little bit helps. There's also things like retirement contributions. You could contribute to an IRA, or if you have a side gig, a self-employment gig, you might be able to contribute to something that gives you an increased deduction. And I like to think of it as taking money out of one pocket, your taxable pocket, and putting it back in your other pocket. Both are your pockets, but the other pocket is non-taxable. It's not taxed today, so it's going to save you tax money. Let's talk about employer retirement plans. My goodness, there are so many retirement plans nowadays. 401ks are very common for larger companies, and I think at the very minimum, if your employer has a 401k, or if you're in the nonprofit world, it's known as a 403b. If your employer has one of these plans, you should definitely be participating in that. At a very, very minimum, participate enough to get their full employer match. Oftentimes, the employer plans are set up so that if an employee puts in up to 3% of their pay, the company or the employer will match. If it were me, that's free money. Participate in the 401k, 403b matching program. And if you work for a smaller family-owned business, the smaller family-owned business versions of those plans would be things like a simple IRA. Contribute what you can to get the full match. And if your cash flow and household income, household bank account and stuff is in pretty good shape, There's no shame in maxing out as much as you can, either in your 401k, 403b, or your simple IRA. The reason is, as you contribute more, it reduces the amount that you're going to pay tax on. What I love about it is it's still your money, but you pay less taxes. On that note, let's talk about things that are avoidable costs. We talked about different ways to save taxes. One way that people frequently get in trouble, especially with do-it-yourself tax filings, is either forgetting to file or forgetting to submit. And I'm a big fan in today's modern era of using electronic filing. You are electronically sending your form to the government, you get a receipt and acknowledgement, and it is filed. I'm a big fan of electronic filing, so take advantage of that. Also, on the chance that you would have a refund, I definitely myself would opt for the direct deposit option, because that money is coming, bam, right into your account, and you will see it when they do it. Let's talk about something else, which is common errors on tax returns. Double check your tax filing before you submit it. When you're going to hit that submit button, it means that you've looked over your return and things like your name, address, your social are correct. Every line on the return from your W-2 gross pay to your tax withholdings, that's all correct. Your spouse's name and social is correct. Your kid's name and social is correct. Check those things, because when they're reported wrong, it leads to things like delays, penalties, rejections, and it's all avoidable. Just slowing down, print it out on paper, read the form, use the RTF technique. That's what we call it in professional accounting world. I definitely advocate using tax software that does error checking, or my goodness, if you've reached a level in life where you can afford a professional tax preparer, definitely consider either a CPA or an enrolled agent. Those are two great avenues to make sure that your tax situation is headache-free, at least for you. If you are high income or if your situation is tricky, there's no good reason not to use professional help. And again, I'm talking about a tax expert, a CPA, or an enrolled agent. What you're gonna find is they typically will be able to help you maximize your refund, and CPAs and enrolled agents are not only well-versed in tax laws, but they can help you identify deductions and solutions unique to your situation. It's pretty common where we can find something that you didn't know about that results in an increase in your income, and I guess in a perfect world, maybe that would cover the cost of preparation or more. By the way, if you have a side gig or a business and you're just not ready to take the jump with professional help yet, I myself have a cloud-based education program, which is for people in business or thinking about going into business. This would be a side gig, a full business, what have you. Well, it's linked in my description here, it's linked in my bio. It is tax strategies for small business. You can learn some techniques that can make a huge difference in the amount the government is gonna keep from you. You can shrink it from this to this. All right, so we've reached the end of the time here. I want to thank you for listening. By following these tips, you can optimize your tax situation, maximize your refund, and keep more of your hard-earned money. By the way, if you found this video helpful, please give it a thumbs up, a like, a subscribe, a follow, and hit that notification bell so that you can stay in touch with tax news you can use by yours truly. And remember, every financial decision that you make today, it shapes your future. So make it a great one. Thanks for watching, and see you next time.